Hey, what's up, everyone? Welcome to Gold Rush with me, Sam Gatlin, and my better half, Mr. Jason Purrs. I was calling him Waldo before we got on the show, and he made a good joke that his shirt is actually a prison shirt representing Silver getting out of prison, getting out of this nearly 50-year nothing burger and breaking out to new all-time highs. So we'll go with that, Jason. He has the Silver shirt on today. I am in Athens, Greece. This is my last week here, and it is completely pouring rain. I went down the street to get some food earlier today. I was starving. I couldn't resist and got completely soaked from head to toe. So I don't know if I really regret that decision, but um, probably wouldn't do it again. It was really cold, but I'm going to be happy to get back to the United States next week and see some snow instead of just water everywhere. So yeah, that's what's on my mind. But today we have a lot of charts to get to. We have silver. Of course, how could we not talk about silver? We have copper, base and industrial metals. We have some coal charts. Just energy in general continues to look really interesting. The dollar getting the shit kicked out of it, making new 1 month lows, getting rejected, just as Jason predicted. It'll be really interesting to see if we can get some follow through in the future here, as that would be a really nice tailwind for a lot of these commodity trades that we're going to talk about today. But without further ado, my good man, Mr. Jean Gauthier, behind the scenes, if you will throw up slide number 2, we'll get the show on the road. So I really just wanted to start this show today talking about silver priced in major currencies around the world, because this is a big moment in history. You know, silver hasn't gone anywhere since 1980 during that Hunt Brothers squeeze, and now silver is breaking out across the world together in unison, not just in US dollars, not just in euros, but everything. So here we have silver priced in euros. We have silver priced in Swiss francs, new all-time highs. Silver priced in British pounds, new all-time highs. Silver priced in Canadian dollars, new all-time highs. Silver priced in Japanese yen, new all-time highs. And silver priced in United States dollars, new all-time highs. Jason, what do you think about this? Because to me, this is a big, big deal. This is what we've been waiting for a very, very long time. I wasn't trading in the 1980s. I'll be honest with you all. I know I kind of look like an old man, but I wasn't there. So, but nonetheless, I've been waiting a long time for this breakout. This really sets the stage for a rally to $100 in silver. And I think it could go beyond that. You know, there's some, mentally challenged people that I see on Twitter constantly pricing silver in inflation. Whenever you see somebody divide the price of silver by inflation, you should just immediately block them, remove them from your life. You don't need that. It's a complete lie. You shouldn't be doing that. I see them saying all the time, priced in inflation, silver needs to get back to $600 to be where it was in 1980. And that's a complete lie. Like, I'm as bullish on silver as anybody else in the world, but I know for a fact that's a lie. That is not reality. They are lying to you blatantly to your face. What do you think, Jason?
Yeah, I think it's, once again, you want to understand that you're outpacing inflation, right? That's a simple thing. Understand you're outpacing inflation. But when you're doing analysis based on inflation and dividing things by inflation, that's ridiculous. Like, inflation is a thing. Like, you're an investor. Why don't you just hold all your money in cash? Well, the reason why you don't do that is because it will never outpace inflation that way. So you always want to either diversify in some way or do something. Sure. But then if you're looking at something like silver and you're dividing it by inflation, you're definitely missing the point. And it's really like, are we traders or are we long-term investors? Would you be holding silver from 1980 to today? Probably not. Unless you're a collector. Like there's people who collect. I'm a collector, but at the same time, like we're traders on here. And that's bad information for a trader. But I love this. Like today we have a lot of silver charts. And
Totally.
like
And Jason,
don't
just on that note, talking about pricing assets and something that you want to make sure you're beating inflation, outperforming. And I think the right way to do that is to benchmark to the world's most important stock market index,
good
which is the
point.
Dow Jones Industrial Average. If you want to neutralize that inflationary effect, if you just have a big pile of cash, and you want to make sure that is worth the same amount in 100 years so you can give it to your grandkids. I think investing in the stock market is a great way to do that. But if you want to outperform that, if you want to make more than the market, I think right now the precious metals are the place to be. I have silver priced in Papa Dow, breaking out to the highest level in over a decade. You can look at something like gold. It's the exact same chart. So precious metals are the place to be if you want to make more money than the market and outpace inflation.
Yeah, I completely agree, Sam. I think that the whole idea of relative strength is simple, which is we're trying to outperform. And as traders, like if you don't want to outperform, put your money in the SPY, take a break. Like sounds really great. Normal people might do that. I'm the most abnormal person most people know. So being abnormal, I'm trying every single day to outperform the market. And then Sam and I also passed on to you guys our crazy ideas in figuring out ways to outperform the market, and we've done really well this year. We've outperformed by quite a bit. And this type of setup is great. It just tells you like, hey, it's time to own silver. Hey, it's time to own precious metals. Hey, we're seeing the most risk on precious metals market that we've seen in years, basically since 15 years ago. So like we're
Well,
seeing,
based on this chart, Jason, which I think is the best risk appetite ratio in precious metals, silver relative to gold, in real risk on environments in precious metals, you will see silver outperform gold. And right now, you're seeing silver break out to the highest level since 2021 relative to gold. And it's doing so in a very decisive way. You're seeing the biggest 4-day rate of change since 2020. And you can see when that first happened, um, you had a little cool off period, and then you got one more thrust, then you got another, and then you got another thrust right at the top. So I think this is an initiation thrust for a brand new primary uptrend. We're going to see continued outperformance in silver relative to gold for the foreseeable future. Speaking of risk appetite, Jason,
I really like this chart. I can't believe you found like this thing looks so good. And did this just break out today, Sam?
I think it was yesterday.
And
I
did the
can pull it up.
futures?
I can pull it up now. Um, yeah, if you give me just one moment. So yeah, that was Tuesday, December 2nd. Now you're getting a little pullback today, down 2.33%. But zoom out. This still looks fantastic.
Yeah, it's a huge move, and just simply looking at this one and going like, hey, we're above those levels. We've been stuck under those for a long time since 2021. And so now seeing that that's breaking out and seeing like year over year, like people keep asking me this, Sam, and I just found it funny, which is, oh, what do you think about the gold miners underperforming with gold outperforming? I'm like, what are you looking at? It's if you look at the gold miners and you're like, okay, gold miners up almost 150%, like across the board. Like if you average them all out, all the ETFs, like I think GDX is the lowest one currently, and what's that, 135%. So like
Well,
they're up
I like
150.
to benchmark to the day gold broke out on March 4th of 2024. And if you look at that date, you have silver up about 110%, gold almost at 100%, and then all of the miners are like double that. So like you have the silver miners up like 200%, a little over that. So that's kind of how I think of it. Miners are doubling the performance of the underlying rocks.
Yes, you just don't want to look at it on, like a lot of people look at these things on either short-term time frames or some other weird metric, and it's really like you want to look at it over a long-term time frame. Sam's looking at how the entire precious metals bull market has moved since it started to move. That's a great way of looking at it. There's also you can look at a 3 month look back window. That's also a great swing trading idea. So if you look at 3 months relative strength, you get a good idea of where that market's going to go within the next month or two. If you look further, you look at 6 months, you get a good idea where it's going to head in the next 4 to 6 months. And then if you look over a 1 year time frame, you're getting an idea of where that thing's going to head over the next year or so. It's kind of a primary, medium term, and short term trends and a way of looking at it. And I bring this up not because like I'm just saying like this is from observation. This is from back tests. Like if you read a bunch of books on relative strength, Meb Faber wrote a bunch of white papers on it. There's another book, Triumph of the Optimist. There's a million books on this subject, and it all talks about momentum investing and how to do it. And those timeframes are very helpful with understanding how to do that.
Totally. And we have a question here from Frey Lee. What does it mean for oil if the 10-year coil resolves up or down? Um, for me, I think specifically talking about copper, Jason and I have been saying that if the 10-year yield gets to 10%, we will see $10 copper. And I still think that's the case today. So I think a breakout in the 10-year yield is extremely bullish for commodities, specifically Dr. Copper. But if you look at the 10-year yield overlaid with something like the XLE, it's like the exact same chart. So I have a hard time believing that a breakout in the 10-year yield would be bearish for energy at large. The relationship isn't as clean with crude oil itself, but higher yields are a good thing for commodities, in my opinion.
Yeah, I think once again, there's a couple ways of looking at it, which is higher yields are usually good for commodities. Where's the Fed rate at, and so on. If the Fed rate is below it, most of the time that's going to be a scenario that's really good for commodities. The Fed rate,
Yeah,
right
it's kind
now,
of more about the yield curve, right,
yes,
Jason?
yes. So that liquidity and that bull steepening is going to continue to fuel our trades, and I think that's part of the reason why we're making so much money currently is that's going to fuel our trades. So what is what I asked Free Lee was what is the coil? Like what are we talking about here? Do you know what he's talking about? Because there's a bunch of different
Yeah,
ones that.
man. Do you not see it on the chart? I mean, the 10-year yield isn't a
Oh, is he
textbook
talking about the 10 year?
multi-year coil.
Is he
Yeah.
but no, he said he said for oil if the 10-year coil resolves. Okay. Sorry. I just read
Yeah.
it as 10-year coil and I was like, what coil are we talking about in 10 years? I want to know about that. But no, it's right. It's if we look at oil and we look at energy right now, we continue to think that that's going to move higher. And I continue to think yields will just go with it. They will probably even front run it a little bit, which is very normal for that to do. So I think that people who keep wanting to own bonds, you guys are crazy. Everybody writes me every day about bonds. They want to buy TLT, they want to buy calls on TLT. I know it looks cheap, guys. Trust me. Like I've been there. I've been trading for a long time. I've made a lot of mistakes trading. One of those mistakes back in the day was always trying to buy what looked cheap and what was in a primary downtrend. Nowadays, I'd rather take the bet on the primary uptrend. I'm going to be right most of the time. I'm not a genius when I say, like, hey, energy is going to break out. And if it does, that doesn't make me a genius. It's just the fact that I'm looking at the primary trend. I'm looking at bond yields. I'm weighing the probabilities. And if I weigh the probabilities, they're most likely going to push energy and oil prices higher. Also, oil down here with the rest of the commodities market all the way up, that makes 0 sense. I'd be very surprised to see that last into next year. I think right now we're at a point where we're going to see energy break out. I think it's going to happen within the next 2 months. We start to get the energy sector XLE above 97, 98. I think that'll happen soon. And then this thing's headed to 101 pretty quickly. And then once we get past 101, we're not looking back.
Totally, Jason. All right. So we've been talking a lot about silver here, but I think there's more happening in precious metals than just gold and silver. I think palladium is a very interesting place right now. So we've been talking about this chart for a long time, Jason. So the commercial hedgers have been carrying their largest net long position ever in palladium futures as the price has gotten absolutely crushed. Palladium fell 70% in just a few years. And now, after churning sideways and carving out a massive bearish to bullish reversal pattern. Palladium futures are now breaking out to fresh 52-week highs. And at the same time, the commercial hedgers are flipping net short. They've completely unwound that record net long position. And you can see here, I've annotated exactly what happens when the commercial hedgers are near a neutral position because they're almost never net long. So here in 2012, when they were pretty flat, you saw a massive 64% rally as they got super duper short. Then they got back to neutral in 2016. Then you saw 150% rally as they got super duper short. And you see when that maximum short position hits, the price also peaks. So there's a really, really powerful signal here with the COT data and Palladium futures. And based on where this is coming from, a record net long, and they're just now flipping net short. I think there's a hell of a long ways to go here with Palladium. The commercial hedgers can get very, very, very short from here. And I think we could see a massive multi-year rally in Palladium. And, if you ask me, I think this is one of the most attractive risk reward opportunities in all of precious metals. Silver is really awesome. I'm not going to take that away from it. It's breaking out of a nearly 50-year base, but in really powerful precious metals bull markets, you see things like platinum and palladium outperform. They're even more junky than silver, gold's crazy cousin. What do you think about that, Jason? Plus, you have this beautiful short-term coil in palladium. This is not the palladium futures. This is the palladium ETF, PALL. So for those of you that are not futures traders, you can use PALL to take advantage of this trend that I'm talking about in palladium.
No, I love the idea here of really getting junky in the space because like Sam's been talking about, like we move from gold to silver, platinum, palladium. The reason why is basically gold is that the safest asset in the precious metal space. So first off, that's where everybody's going to go. Then they're going to start to move down the cap scale, basically looking for different opportunities that what could catch up and so on. See that in silver. Now we're seeing it in platinum and palladium. Platinum went up 60, was it like 60% like within a month or something? Like it was a wild move in platinum. And then palladium's now following it. So I do think palladium is where you want to be right now. I think it's the next one that's going to make a major move. We've highlighted SBSW, I don't even know, 1 billion times for our members. So we've been making a lot of money in this space. SBFW is what's up almost 300% this year. So
It's
like
been a huge winner. Yeah.
yes,
Yeah.
there's
Shout
been
out
a
to
lot
South
of
Africa.
yes. There's been a lot of great trades out there. And that's one of them. And I think as we get through the cap scale, like now's a good time to start owning Palladium. Palladium makes some big moves. I mean, look back at those moves it made in 2015 to 17, 18, all the way from the end of 2018 into 2020. Like these are massive moves that happen in a commodity. So if you have futures, you have a lot of leverage on it. You have the ETF, you're still making a lot of money. So I think it's an area you want to continue to own and hold.
Totally. And it trends so nicely, like for those of you that are trend followers, look at how Palladium trends. It has these periods of just straight sideways, it has these periods of going straight up, and it has its periods of going straight down. So, I mean, there's really something here for everybody in Palladium. I really like this product. Right now, I think that trend is definitely higher in Palladium futures. All right, shifting gears to base and industrial metals.
And
So
we'll get to the
Jason and I,
energy questions soon, guys. We'll get to the energy questions soon. They're great, but we'll get to those in a little bit.
yeah, we have some energy charts at the end of the presentation, but I want to get to base and industrial metals because this really has me excited right now. If you want to go check out our latest Commodities Weekly post, you can go to our blog, allstarcharts.com, and you can find that there where we dove into the base and industrial metals. But, just a TLDR, gold rings the dinner bell first in the commodity cycle, and then you have base and industrial metals go next, which copper is like the poster child of base and industrial metals, but it's by far the biggest, but it's not not the only one out there. There's a lot of different products that we've been covering in this arena. So you get precious metals, then you get base and industrial metals, and then you get energy last in that commodities cycle. And right now, we're at the point where precious metals have absolutely ripped. You've seen gold make new all-time highs for a year and a half now. Now silver is breaking out of a nearly 50-year base, making new all-time highs priced in every currency, as I showed you earlier. And now it's time for that catch-up trade in the base and industrial metals, and that's exactly what we're seeing right now. Copper closed November at the highest price ever, and it's putting the finishing touches on a base that looks eerily similar to gold. So I like that a lot, and it's not just the commodities, but it's the stocks too. You can see that copper and gold miners dance together, and they have for a very long time, and they're breaking out in unison to new all-time highs. And look at this short-term coil in copper miners. So you zoom out. Copper was consolidating at this 2011 peak, and this is exactly how it was doing it, just straight sideways. I mean, I have dreams of charts like this, Jason. Like, this is so beautiful. I mean, you have this massive structural reversal pattern, and you get there. You expect the sellers to step in some way. And the buyers just absorbed all of that selling pressure over the course of several weeks, and now they're decisively taking control and ripping copper miners to new all-time highs. And Rick pointed this chart out. Glencore, he tweeted this chart yesterday. It's one of the largest. I don't know if it's not the largest. It's certainly up there.
It's a big one.
Yeah, they're kind of a big deal. I don't know if you heard of Glencore, but they're a massive commodities trading company and very involved in the base and industrial metals. And you can see they're decisively reclaiming that COVID low anchored VWAP. So, across the board, if you look at the smallest base and industrial metal stocks, they're ripping. If you look at the biggest ones like Glencore, they're also ripping. So what do you think about this base and industrial metals trade, Jason? Because I am very excited about it.
Yeah, I think I think we're just moving through the cycle. And the thing, we highlight all the time the way the cycle works, but what you guys get to see from our posts, from the videos and so on is the way we're trading it. If you're a member, you get the trades, you get to understand like, hey, we're not just buying the crap out of energy because we think it's going to move next. We're still buying the crap out of base and industrial metals and a lot of those metals and mining sectors currently. And we're moving down the scale as we get to those energy names. And right now, there's not many that we love. Like there's some refiners that look good. There's some areas that look good, but for the most part, we want to see the sector broadly start to move, and we're getting close to that. But once again, like there's these other areas, and there's so many trades setting up right now that we're not like missing any trades at the moment. We have plenty of trades in all of these different commodity sectors at the moment. So, generally, I think that as a trader, you have to be able to look around everywhere, whether it's international names or whatever. And so there's just so many different things that are moving right now. They're all moving smoothly, nicely. So once again, I just want to be long. I want to be long all these commodity sectors. I want to be long all these commodity stocks. I think there's a lot of money to still be made in this trade.
Totally, Jason. And this dollar chart is a really big one. I mentioned it at the top of the show, but the dollar has gotten slammed recently, breaking down to new 1 month lows, finding resistance at the shelf of former lows. This is exactly what we talk about all the time, Jason. Polarity. It's such a beautiful thing. Former support turns into resistance. That's what's happening right now in the United States dollar. Um, I think the big question on everybody's mind is, are new lows on deck for the dollar?
I think they are. I think that we're going to continue to see this trend exactly the way I've been thinking for a while, which is that big move down that happened at the beginning of the year was just the beginning. Of course, it was bouncing. Of course, it based out. Of course, everybody got very bullish. Of course, everybody wrote me every other day about how ridiculous it is that I think the dollar is going to go lower. And of course, it bounces right off the zone we would have thought. And we highlighted before that it was going to bounce off of. You had the anchored VWAP hit that level. You also have a lot of resistance at that level. I think this thing's going to just continue to put in lower highs. I think we're really targeting around that $90 level. And what that's going to do to stocks. Because so this is the thing, this is a way to take intermarket and use it for yourself. When you're looking at the dollar and you're going, okay, the dollar is ripping, stocks are moving down, we're in trouble here. And then you go, okay, but the dollar could hit this zone and possibly go lower. Then you'd go, okay, what do I want to invest in then? Okay, the gold miners pulled back pretty heavily at one point. So did silver, so did all these things. So you could have started to buy some of those positions if you're a short term mean reversion style trader and be ready for the dollar to move lower and these other things to start possibly move higher. So I think this is also give a good catalyst to give more liquidity to the stock market. So as we're going to see more liquidity to in the stock market, we're also going to see that move up, which has been happening. But also something I've been finding interesting, Sam, is we're seeing the small caps outperforming. Something we haven't seen in a while. So the small caps been outperforming lately. Energy's been like holding up better than most sectors. I think this is a very interesting time in the market that we could possibly see a shift, and that coincides with the weaker dollar, international trade, still sticking with the international markets because they look great. Looking at gold, looking at silver, looking at palladium, platinum, and all the miners inside of it and all the base industrial metals. I think the setup's here for the dollar to go a lot lower and for us to make a lot more money in the trades we're already in.
Totally, Jason. All right, we've already talked about this chart kind of. As you can see, metals are dramatically outperforming energy, and that's why we are so bullish on the metals. And, we think that energy will participate at some point, but, right now, energy is not where the relative strength is. It looks very constructive, and I think it'll have its time, but, today is not that day to be um, holding a massively overweight energy position. And then this just shows the same thing. Metals, they're at the top. They are the leaders. We want to own the leaders, like we've talked about during this show. We showed you silver, we showed you palladium, copper, base and industrial metals. That is the place to be right now if you want to make money in this commodities market today. And Jason, you've been really talking about coal a lot recently, and coal is a beautiful thing because it's not just energy. It has some energy aspects to it, but it also kind of trades with the base and industrial metals. If you look at something like XME, which I'll pull it up right now. I think HCC, the largest coal stock in the world, is the like second largest holding in the metals and mining ETF.
Yep.
Yeah, it's the third largest. So you have Hecla Mining, I think that's a gold stock. Then you have Alcoa, an aluminum stock, and then Warrior Met Coal, HCC, the third largest holding in the metals and mining space. So, what do you think about coal? Is it more of a metals and mining trade, or is it energy, or is it both? How do you think about that?
I think coal is a little bit of both, right? So it's a mixture. It's kind of interesting because when you look at the base and industrial metals, if you were to put it on the chart of gold, copper, and then oil, it sits right between copper and oil. Usually we start to see this move first. So this is going to move a little bit earlier, even go back to 2020. You kind of saw that similar move kind of happen. And then energy really follows it. So this is also another reason why I'm just very bullish on everything in the commodity space, really. Like, I'm not saying like I'm buying everything, but I'm saying it's almost likely going to move. I'd be very surprised to see, if coal and let's say energy just didn't move here. Coal's already made a move. We got a nice breakout in that sector. We're still basing out. It's not as bullish as some of the other things we've been talking about today, but I think this is another one that you want to continue to take signals in, find strong stocks in that sector, and then just have alerts set. Hey, I'm going to buy it here. Hey, I'm going to, get into this trade here. I think that's an easy way to take advantage of this trade. I think there's a lot of money to still be made here.
Totally, Jason. It looks fantastic. I like a lot of the setups. I was going through all the coal stocks this morning, and yeah, I'm into it, definitely. Yeah. So
10-1,
everybody,
dude.
a little homework assignment for you. Go through your coal charts today because they look great. All right, Jason, we have a question in the chat. One of the main goals of the Trump administration is to drive down the cost of energy for the consumer. Just look at the price of gasoline coming down to low levels. In view of this, Why would you think oil is going up?
So let's talk about news, politics, and stuff for just a second. So, number one, the news has been telling you that there's a ton of production here in the United States. We have an oversupply issue in oil and so on. The IEA recently revised that down. I've been talking about it for a while. It's like you can't just like will more oil into existence. It's not how it works. So that started to move down already. Next thing is, yes, the president can get on TV and every day and say, like, this is our view and this is what we want to do. That doesn't mean things happen. It means that sentiment wise, like people can get spooked. It means short term prices can move down. But in the long term, it's not going to hold the price down. You can't manipulate a price. It's kind of like people talk about stock manipulation all the time and they think I can't trade because the JP Morgan or this guy or that guy has this much information and I don't have an edge and blah, blah, blah because of all the manipulation. People have been talking about the silver market for years. Oh, I can't trade silver. Why? Well, it's manipulated by JP Morgan, so therefore I can't do it. I mean, it's literally like number one, like let's say that all that's happening. Great, who cares? You can't control that, so don't do that as a trader. So if it's happening or not, it doesn't matter. But we want to continue to buy these things as we get the signals and not care what is happening with Donald Trump or whatever Santa Claus or whatever person you really look at for
I
information.
love what Kenny Glick says it all the time, that he is the manipulator and not the manipulated.
Yeah.
You can make a very good argument that the market is rigged, and that's
Mhm.
okay. Like, it doesn't matter. It doesn't mean you can't make money. Like, who gives a shit if the market's rigged or not? I mean,
Yes.
if the trend is in place, you can ride that trend and make a boatload of money. I mean,
Well,
it
think about
doesn't
this.
matter at all if it's rigged.
Think about it this way. You got Donald Trump and he comes out with the tweet and you're like, okay, the S&P 500 is in like this massive uptrend. And then Donald Trump has a tweet and the market moves down. Does he continue to hold the market down? Is there some way of him holding it down over time? And the answer is no. It's the same thing with like gasoline, oil, energy. It's like, yes, he could say, this is my idea. I don't like inflation. I don't, but once again, what's he doing on the other side? Well, he's going to remove a Fed chair and make sure rates are low how he wants them. He wants rates low. He wants more quantitative easing. What's that going to do to energy prices? Well, it's going to make them go a lot higher. So once again, it's like you can look at what it's like the man behind the curtain, like look over here, don't look over here. Like really, he's trying to talk about things that people want. Like people want lower prices, people want this. However, if he really wanted real low prices, he would just go and raise rates. Like you could raise rates to 10% and you'd have the lowest prices in history and he could be the president with the lowest prices. However, that's not what really is going to keep him in office. What keeps somebody in office is high stock prices. Because guess what? We don't have a lot of like saved wealth in the United States. Everybody's kind of moved into retirement accounts. So most of their money's in retirement accounts. Who votes? It's older people over younger people. They have a lot more assets, whether it's houses, retirement, whatever. Also, who's going to inflate your real estate? Well, that's also Donald Trump. He's going to be in there cutting rates and making sure real estate prices stay high. So all of these things will continue to fuel the commodity cycle. And the commodities are telling us this. Like that's it's if we were looking at a different scenario and I wasn't seeing gold moving, copper moving, coal stocks moving, and so on, I wouldn't even be talking about it. However, with the cycle moving the way it is, with the fundamentals set up the way they are, it is definitely set up for oil prices, commodity prices generally to continue to move higher and inflation to continue to move higher.
Bill in the chat says oil did bad and solar did good during Trump's first term. That's absolutely
That's
right,
true.
Bill.
Yep. Yep.
Look at solar. Solar is ripping. We didn't bring any charts today, but that's certainly a place that we've been watching. Solar um, certainly looks good.
So
All right,
second lesson real fast, which is
all right, all right.
when you go all the way back to Joe Biden's turn. Joe Biden, what sector did the best then? Well, it was energy. Well, what
Cool.
happened at coal? Sorry, coal even did better than energy. But like out of the spider sectors, it was energy. And so what were the analysts all talking about? Well, if Trump gets elected, you want to buy energy, you want to buy banks and so on. 2020 after Trump or Biden gets elected in 2020, banks, energy, that was where you wanted to be. And they said if Biden gets elected, you wanted to buy technology, you wanted to buy software stocks and crypto and all this. And those got killed that year and the years coming up after that. Energy was the best performing spider sector for 4 years under Biden's term. Politics are just bullshit. Like, let's be honest. Like, it's bullshit. It's horse shit. Stay away from it. It sounds cool. It's kind of like fundamentals. Like, they sound great. I could sound very smart and talk about PE ratios and all this shit, but none of it really matters. The only thing that really matters is the price and what direction it's going and how that looks relative to everything else. And so that's what we continue to do here. Even this chart, we're looking at price relative to everything else. We're looking at oil prices being massively undervalued compared to stocks at the moment. And when we get to that danger zone is most of the time when this thing turns around, and we're there right now. So it's make or break time for energy. Not saying, like, once again, I'm not saying go out there and buy the crap out of some oil stocks right now or buy even oil. Waiting for oil to get above 80, wait for XLE to get above 97, 98. And then you're going to see this thing move.
Totally, Jason. Well said. We have a question from Frey Lee asking about cattle and grains. So with the live cattle futures going back up, does that mean that grains will go down? Um, in the short term, yes. But as we've talked about on the show before, there is a structural top being put in with the feeder and live cattle futures, and there's a structural bottom being put in with the grains. So I think over longer time frames, that is still the case. I think you want to favor the grains, and this is, in my opinion, a counter trend rally in the cattle markets. Do you see it any differently, Jason? Are you still holding your grain longs? I know you've gotten several signals here in
Yep.
recent weeks.
There's still long corn, soybeans. I am short live cattle. We still do have a long feeder cattle position because that didn't get out of the portfolio just yet. No stops there. But I would continue to think that over a long-term time frame, just as Sam said, we're definitely going to see the grains continue to move higher. Like, I can't see a scenario here where that's going to stop. Same thing where I can't see a scenario here where live cattle just rips another 100%. Anything can happen in markets, and I don't know everything. I don't have perfect information, but I think, like, looking at the live cattle setup, I actually was doing a write-up on it just for myself. I do those a lot of days because I know not everybody in the world wants to talk about live cattle every single day like I do, but live cattle really looks like it is set up to go a lot lower here. So I think as this continues to move lower, I think that's where we're going to make a lot of money going forward on the short side of live cattle, and we make a lot of money on the long side of grains.
Do you hear this lightning outside?
I did hear it, yeah.
Wow, that was
Well,
really
I
loud.
heard the thunder. I heard the thunder.
Thunder, not lightning. Excuse me. Um, man, quite the storm here. All
That's
right, this was
exciting.
an awesome episode of Gold Rush. If you all enjoyed this, you should check out the rest of the research that we do at All Star Charts Gold Rush. There is a link in the YouTube description for you to check out all of our research, but just a TLDR, we cover everything in fixed income, commodities, and currencies every single week. And it's not just the futures that we're trading, we're also outlining individual stocks because we know a lot of you don't trade futures and want the stocks. So we're here to give the people what they want and to make a ton of money. And that's exactly what we do at All Star Charts Gold Rush. So if you want to check us out, it's $12.99 a year. And click the link in the description to learn more about us. But I just want to thank all of you for being here and making this a great show for everyone. Shout out to Bill and Frey Lee and Rondell and Trip Davidson. All of you, thank you for being here in the YouTube chat. For all of you other viewers that weren't in the chat, what are you doing? Come chime in next time. We'll be here again next Thursday for another episode of Gold Rush. And we'll have a special guest, a very special guest that you will not want to miss. Yeah, we'll see you there. Until then, try to stay safe out there and try to make some money.
See you guys later.